Welcome to Davos 2019, to all those here in the audience and watching our live feed as well. We're here to talk about blockchain and how it's shaping healthcare and insurance. Who are the winners and losers? Who are the disruptors? And where do we see the biggest risks and, of course, opportunities? To set the scene, we've created this short video for you. Let's take a listen.
Have significant uses in healthcare. As a distributed ledger system, blockchain offers the opportunity to automate time-consuming manual processes, dramatically slashing operating costs. Counterfeit drugs cost the industry between an estimated $75 to $200 billion globally. A shared secure blockchain could authenticate drugs sold and provide a full audit of the manufacturer, giving greater transparency. The encryption of blockchain prevents data tampering and unauthorized access. The most notable benefit will be streamlining the administration and data management involved in paid-for healthcare systems. Taking a 360-degree view of a patient's medical care could offer transparency in treatment, resulting in less errors in prescriptions or billing. Fraudulent claims could also be reduced. Improper Medicare payments cost $59.6 billion, 10.5% of total payments in 2015. Clinical trials could access the data of potentially thousands of patients, providing benefits in early detection or results in drug trials. The potential for blockchain is still in its infancy, but what it can offer will be far-reaching.
So as you can see there, the promise of blockchain. What I want to do today is, of course, to cut through the clutter and the hype. We'll get real-life examples of how blockchain can revolutionize healthcare and the insurance industry. I welcome to the stage now Lata Varghese, who heads up blockchain for Cognizant, and MetLife's Chief of Innovations Asia, Zaman. Now, very sadly, Sally Eves can no longer be with us tonight, so we're going to shake it up a bit. We want to hear from all of you. I want to get a fiery discussion going, so I would love for you to just jump in if you have any burning questions at all. So let's just set the scene first. Okay, let's demystify blockchain. In the perfect ecosystem, how can blockchain change our world if it reaches its full potential? Zia?
It's just a shared infrastructure, and one of the ways I like to think about it is if we currently operate in silos and value chains, we could potentially use blockchain to collaborate better. It allows different parties like MetLife and our reinsurance partner to share information at a specific moment in time to make it easier for us to collaborate and operate in a different business model that would decimate the costs.
How about Lata? You help clients identify blockchain solutions. What applications could we see?
Sure. To your first question on what are those, big, what's the nirvana in financial services?
Yes.
For example, is fully digitized assets and real-time settlement, et cetera. And in a healthcare scenario, it would be where, a patient has sovereignty over their data. By that, what I mean is they basically access, control, and how their data is accessed, how it moves around is all in their control. But all of these are kind of the potential, the long-term potential of these use cases. But what we see in our experience is clients are really taking stepping stones towards getting to that future by experimenting with the technology in more operational use case kind of settings, especially in healthcare.
So let's cut through the hype. As we heard Alan say earlier, there's been a lot of hype around blockchain, thanks to cryptocurrency. Give me some real-life blockchain examples that are taking place right now.
Yeah, I would really like to talk about Vitana, which is really interesting in a couple of different ways. And we work across industries, so we have a unique perspective about how advanced or innovative a project is. And if you look at the way MetLife has tried to take this, It's interesting because it intersects industry lanes. It goes between B2C and most use cases in the financial services sector and others are more B2B focused because that's typically there's less risk and you have to get an organization behind you if you have to take these systems live. Whereas in this case, this is actually B2C. So we had to solve for two kinds of things. You had to solve for the customer. In this case, so you had to give access to the mobile device. You had to have integrations with payment gateways and all of that. And similarly, on the B2B side, you had to be sure that you are providing for the different stakeholder, the integrations with the existing system. So it was super interesting from that perspective.
Right, different stakeholders. Zia, take us through the human impact. How is this going to change things for the end user?
Sure. It might be useful just to tell you a little bit about the customer journey for Vitana. So when we first started, we were thinking, like what Lata was saying, how do we do a use case which is B2C that allows us to experiment or test or learn about distributed ledger technology, and in particular, the smart contract feature. So if you're wondering what a smart contract is, the simplest metaphor that I would give you is, I live in Singapore. If you put a piece of metal into a Coke vending machine, and it is the size and weight and dimension of a $1 Singapore coin, a smart contract executes and out comes a 2 degrees Celsius Coke Zero. That's basically an automated rule that says, if this, then you get the smart contract executing. We wanted to make something around health insurance that was as simple as a Coke vending machine. And we started to look for triggers that we could basically use that everybody could agree with on the chain to say, this has happened. We started looking at death, which is obviously a very clear trigger, but eventually we turned to pregnancy, another clear trigger. And specifically, I want to talk about the journey. So
give us an example.
You're right, you're pregnant. You're 5 weeks into your pregnancy. And you walk into your OBGYN, your doctor, and he says, hooray, you're pregnant, but you have to worry about certain risks. It's your first time. And here in Singapore, 1 out of every 5 women gets gestational diabetes. And that's independent of lifestyle or BMI or other factors. So it's a real concern. But at that moment, he then says, well, there's this test that you could take. It's called an oral glucose tolerance test. But basically, it's been bundled into this new type of insurance from MetLife. Do you want to try it? So at that point, she downloads this particular app. And within a couple of minutes, the underwriting rules apply. And she basically gets, for about $65 US, a smart contract that says, I'll be covered for gestational diabetes. Let me run the clock forward. It's now week 25 of your pregnancy. You go for your OGTT, your oral glucose tolerance test. The nurse at that point finds out the result of that test. If it's a 0, she writes it onto the blockchain. Nothing happens. Everybody's happy. She doesn't have gestational diabetes. If it's a 1, what do you think happens? Of course, the smart contract executes. We find out, our reinsurance partner finds out, the regulator finds out, and we execute the rule, which is we pay her $350. And if you don't mind, do you notice something about that whole experience? There was no claim moment. We're all tired of doing claims with our insurance providers. So we said, let's leverage, with Lata and Cognizant's help, the smart contract feature to have a wow experience for that customer, that patient, that woman. So
no form filling, basically.
No form filling. In fact, we tell her at that moment.
Just wanting to turn this on its head,
yes.
too, as I've been speaking a lot with the NHS and various health providers. Would there be any situation whereby, this test might, for example, exclude someone from a product? Is there that danger?
So what we're trying to do is to try to include more people rather than exclude them. Let me explain what I'm trying to say. Right now, there is no coverage for gestational diabetes under those circumstances. It's not like the United States, Canada, or the UK, where everything is generally covered. In Singapore, you pay $1,500 to have a baby, and $500 more if you have GD. So in this particular case, what we're doing is we're providing access to a protection product that gives peace of mind to women, so that they can basically not worry about gestational diabetes. The exclusion part for the insurance people in the room is basically, how do we make sure that we ask as few underwriting questions as possible so that we are looking at the pool of people who can benefit, but we're not adversely selecting those people who are going to have an incredibly high probability of actually having gestational diabetes. For example, if they actually have diabetes in the first place. So in many ways, what we're looking at, and this is just the first test, Angeline, is what are some of the other conditions for which there isn't coverage yet, for which we can include more patients and get them the coverage that they need.
And Zia and Lata, the key to this, of course, is, I guess, the data, because the underwriting will have to be exact, right, to make these smart products viable.
Exactly, and the way the design considerations we made and how we, but before that, I'd like to tell the personal story of, I know a thing or two about gestational diabetes because I was gestational diabetic with both of my pregnancies. So the first time it happened, it was, I know what hit me, you go Google, what does this mean? And then you find out about, but then I live in the United States, we have coverage, this is covered by insurance. So when we were, doing this project, it was very meaningful. I mean, this is actually a coverage gap. I had only first world problems, which is that, if I was, cheating on a meal and I just forgot to take my reading, and then so that I could dodge the, nurse's phone call when she called me. But, you have a lot going on. As, being gestational diabetic, you're, advised of the risks and so on and so forth. So I think just having this product available to an underserved population, I think that's very unique about it. And then in terms of coming back to your question on how did we solve for that, so patient confidential data, health data. So the way we've designed it is no personal confidential health data of the customer even resides in the MetLife server. So there are important, not to get too geeky or technical, but how you design. I mean, you don't have to take a shotgun approach and put everything on the, there are ways in which to use this technology where you design for, you decide what stays on chain, what stays off chain, and what do you pseudonymize. You still need to be able to query the data. So how do you provide? So the structure in which you design the solution becomes really important. And the way this seamlessly flowed, the health information, to the at the point of purchase, the underwriting logic is in the smartphone, is in the app. It takes the data, and if the policy is issued, they buy it, they're able to pay for it, and then, like he said, week 26, the event occurs. There's no dispute. You get automatic payment to your bank account, which is already linked to it. So the way you design these solutions is extremely critical. So you don't want to ever put patient confidential health data, for example, on the blockchain. But there are other ways in which you can structure these to make progress.
Can I build on that just briefly?
Sure.
So we only keep the information, the minimum amount of information that we need on the chain. But you asked the question about what types of data. It has to be incontrovertible. Data that we all agree that if a doctor says it, then it is the case, and therefore that patient actually has what's called an A1C count above a certain number. And so when we look for triggers, and the advice is for anyone looking at blockchain applications in healthcare, make sure that the triggers that you're using for the smart contract, no one's going to debate, does she or does she not have gestational diabetes? So the next use case will, again, be death, where there's little debate as to whether or not that Singaporean actually has passed, and that will be a great trigger to use for something like this.
Now, many advocates of blockchain say that, it's way more secure than the IT systems we've got right now. I've been speaking to Nicholas Berry, corporate insurance partner at Norton Rose Fulbright. He says, yes, blockchains are immutable. You've got this paper trail, digital form, everything's there for everyone, all the stakeholders to see. But he says this does not guarantee that information is correct if collected from, dubious sources. What would you say to that?
Yeah, garbage in and garbage in forever.
So how would these ecosystems, scrub the data to ensure that the correct data is put in and managed? Healthcare, as we know, it has a complex ecosystem. It's not the same as, for example, a policy for flight cancellation. Now, blockchain has been utilized where if you miss your flight, if Davos we're snowed under, your flight doesn't take off, it automatically executes booking you onto another flight.
Right.
But there are no exclusions. Healthcare is complex. There are doctors, nurses.
Right. So which is why before they touch critical patient data, the way we see, at least in the United States, there's a lot of interest around the provider data management. This is not very, cool to talk about, but that is the way enterprises. There is an alliance that's been announced between United, Humana, and Aetna, which we are watching very closely as Cognizant, is how when every insurance company needs to keep information about their doctors, current. What times do they serve? What are their hours? What are their certifications, and so on and so forth. So this is data that every company individually collects, and they all spend a lot of redundant time in. So they are looking to solve for this use case, for example, in 2019, and I don't see them taking a leap. And so they will have to do these testing. They will have to get this live, get comfortable. Then the risk profile will gradually change. As they get more comfortable, it is only then that they will start, towards that journey that I talked about, towards let the patient have ownership of their data. I mean, until the infrastructure is ready, having the digital identity. And those things are really long term. How we think about digital identity may completely be different in about 10 years. But you need a lot of things to happen for that. You need kind of a comprehensive trust schema that goes across borders, et cetera. Until you get to that point, I don't see how enterprises will just make that leap and start to use, for your example, blockchains to use that kind of data. But they will take steps towards there. The technology will sort of improve to catch up with the applications.
Well, talking about applications, we're certainly seeing, other sectors taking interest as well. As you mentioned divorce insurance. Would you like to share a bit of this with the audience?
Yeah. There are a lot of different use cases. And yeah, healthcare is on that spectrum of it really matters when you get this right. As we talked in the prep before, we were talking about the fact that, the doctor and the nurse could get it wrong. Even if they're writing it down on a piece of paper or in an electronic health record. What we do, whether it's an analog world or digital world, is we just double check, put checks and balances in to make sure that's the right number that gets into the system. So what I would argue is that for lower stakes smart contracts, we might see blockchain implemented sooner, like with the travel insurance example.
So lower price point.
Lower price point, more micro moment insurance is like what we like to say. And I'll give you a few examples. So the one that drew a laugh once was, what about divorce insurance for fathers of the bride? Any fathers of the bride out there?
One is looking
so the logic would be, you show up with a divorce decree in the first year, and automatically you'd get maybe half of your wedding expenses reimbursed back to you, something like that. So I mentioned that as just a lighthearted example, and someone in the back of the room put up his hand and actually said to me, we already have that in China. And in fact, what you can do in terms of experimentation, Angeline, is to think about, again, what are some of the triggers around which you could create a smart contract? And it's anything that could be embedded into, for those who know how to code, if then else statements. So they have this insurance product in China around, if it rains tomorrow and my commute is going to be bad and I'm delayed to get to work, I want to pay out. That's the kind of sort of micro moment insurance that you could potentially put in place. There's some more serious ones as well. We're looking at BRCA1 and BRCA2, which are the genetic mutation that Angelina Jolie famously had, and basically saying if you have a propensity to have breast cancer or ovarian cancer, we might be able to give you some sort of payout against that. And there are a number of other examples of how you can basically peer into the future by looking at this Vitana example and say, here's how insurance might look in the future. That's completely new to what we do today.
And I think it's critical, all of the complementary, the ecosystem of, the question shouldn't be, can blockchain do this? The question is, do enterprises who have all these, ills and efficiency or trying to enter a new market, do they have the will to, use a technology stack that is unique and be able to?
Is there the will?
Definitely there is the will. But again, even with that, all of the ecosystem, if a serious enterprise has to take this to production, they need to have, secure key management. They need to have data purging strategies. They need to have a lot more than just being able to do an experiment or even a pilot in a limited scale. So being able to, ask, because if you try to take it to production, this has to go through a very complex process of, being approved by their risk, by their legal, and this needs to, and they don't care about, what blockchain. They're trying to protect they're trying to protect the interests of the firm. So they will look at it with, has this been buttoned down? What is the security? What's the perimeter security? So they're going to have security is such a big impact. So it's not just because this is cryptographic security, it's transparent, it's immutable. Those are not why. When implemented, how do you structure all of the different technologies around it to make it, production ready? I think there are some big clients and big industries who are taking that step forward.
Well, certainly we've seen IBM, of course, investing heavily in the space, blockchain in various different forms. Google as well, as you all know. But there are also, of course, emerging doubts. A recent report from McKinsey said despite the billions of dollars of investment, evidence for a practical, scalable use for blockchain in general, not healthcare in particular, is thin on the ground. What would you say to that?
I think I know the report you're referring, the blockchain's OCAM problem. I wouldn't, if you go back to our point of view has always been the same. For enterprises to seriously adopt it, they are going to go through a phase. Any enterprise software goes through a certain cycle. We don't see this as being, very different. There was, I think, too much hype almost, which acted against the technology where people were trying to apply it to all kinds of things. But that doesn't mean, I think, we can see reports on either side. You'll say that it'll disrupt everything and it'll go. I think the answer is in between. I think the time, I think any new technology will have zealots and naysayers. I think in blockchain, it's just amplified many, many times. So it's a question of, for the right use cases, where there's a real problem, where there is, no legacy. Let's say there's a way that information is being exchanged.
Yes.
And they're using, archaic email and fax, perhaps, right? So that's not really digitized. So trying to apply it there and then scale it from there. So the real, financial market infrastructure kind of they are inherently hard, right? You have to get buy-in. You have to get. They have to, allow they have to also make significant investments. Let's not forget that. So I think it's and I like to borrow a term from Brian, who's in the thing. Like he says, like if you're looking for home run ROI. And trying to get these projects, you're not going to get them. But that's where projects like this are interesting.
Yeah,
like Vitana.
Yeah, these are early days yet. So the advice back to any other enterprise is it's going to take some time to test and learn and figure out how to make your model work. Lata was saying earlier that it's not for the faint of heart. We got in fairly early and tried to experiment around the world's first health insurance on blockchain in order to figure out what's easy and what's not easy. Dealing with healthcare data is not easy, but what we did recognize is the potential to do new insurance outside the core, new stuff, is so much easier with the back end of distributed ledger. And that opens up opportunity rather than trying to fix the legacy
So
issue.
if you tout the clearing and settlement, for example, as the big use case, it's obviously going to take time. It's critical market infrastructure. If you're talking about giving patients self-sovereignty over their health data, the infrastructure needs to evolve, the plumbing needs to evolve. And until that is, talking too much about the grand vision use cases, much ahead of the readiness of the stack, I think, has been a problem in the industry. But that does not take away from the fact that this will get adopted and, applied. And over time, you'll see.
Absolutely correct. So that's why we're going to focus on the real-life examples now. Let's just throw it to the floor. And I'm looking for questions from all of you. Oh, we've got Jonathan Raj, CEO and co-founder of Kedit. Your thoughts?
Sure. So going to this point of infrastructure, these advances are actually happening now. When we're talking about private data and managing private data in health, it's a critical issue. So there's companies that are pushing, such as ourselves, pushing the field of zero-knowledge proof, which is technology that lets you prove things about data without having to share the data itself. It finds its place at the heart of those systems and makes the whole sector move forward into production and being able to move across this hype phase and into practical systems. And looking about real-life examples, so when we're talking about preventing fraud, in drugs, you want to be able to follow where these drugs are coming from, but you don't want to share in a transparent way who gets what and suppliers, their relationships with in the supply chain. You still need some privacy for those businesses to operate and not reveal everything that they're doing. So the infrastructure part is crucial so that you can deploy these in the wild. The other example around the insurance part, this part of fighting fraud with insurance, you need the collaboration of competitors to make sure that you fight the fraud. but competitors cannot share their data, their raw data. They want to collaborate, but they cannot share the raw data about patients. So this is where technologies such as distributed ledgers added to privacy components such as zero-knowledge proof can solve those issues.
So we've been talking, to multiple companies in the pharma, drug supply chain, and all of them, the DCSA Act, the Drug Supply Chain Security Act, I think that already requires them to have interoperable electronic systems with data standards. And when there is such a regulatory need that they, by 2023, I think they have to comply and show that they are able to show between adjacent trading partners, be able to track a drug to its source. Every one of the companies we are talking to are looking at blockchain, for that solution. So I think what you're saying is true. Depends on the markets, and how much, burden of legacy exists. If there's less, there's more adoption, there's more openness. And I think if there's a lot that's already working, enterprises don't just adopt technology because it's better. They do it for, they have other things to go through, an approval process. Yeah.
Thanks very much.
Thank you.
We have Inigo Marino from SAP, and you talked about engine and data being the fuel.
Yes. First of all, thank you very much for your time. It could be very interesting talk because in SAP we work with our customers to understand that they business challenges and we using the technology to help them to achieve it. And if we believe that the blockchain is critical now and it's going to be critical in the future, we need to believe that the data is critical for run this blockchain. Imagine that if we say it and we believe that the data is the new oil in the 21st century, it could be blockchain the motor of this 21st century. And for that, my question is related with the public administration and with the public IT infrastructure and the health system. Do you feel that it could be possible to apply in the near future blockchain to improve the administration health system, or we need to wait 10 years, 20 years, or I don't know more until that? Thank you very much.
Do you?
I can only answer from a private sector point of view. It's not about the technology, people. It's about the use case and driving benefit for the customer. It really isn't about the tech. We don't look at it from a perspective of, let's find the technology and look for a use case. We say, how do we include the next 2 billion people in insurance across the globe? And the simplest way to do that is to increase the simplicity and increase the trust. The beauty of what this can do is that it gives young people today in the emerging markets the ability to say, if this happens, I know I'm going to get paid. And that's the core benefit for us that would make us a more trusted insurance provider than somebody who does not experiment with technology, which allows us to do something like that. So stop talking about the tech. Start focusing in on whether the financial service company, the insurer, or the diamond company, for the Providence example around diamonds, can benefit from what can be elicited by that particular use case. I won't comment on that public healthcare system, but
I don't know. I think the question you're asking is, will the public permissionless systems be used? I don't know.
Oh.
I can't answer that.
No, we don't know.
I believe, yes, question over there.
Hi, my name is Elizabeth, so I'm an independent consultant, blockchain and healthcare. Yeah. So Lata, you mentioned around health data and in the use case itself. There's been a lot of writing about, taking more ownership of our health data and how much can we actually monetize our own health data. I would like to combine the question in such a sense that to see it as well, given that at this point in time in the insurance industry, you're looking very heavily more around streamlining your own internal processes. How do you actually defraud the system, etc., which is why you use a lot of the enterprise blockchain rather than the permissionless. Mm-hmm. Do you, being the chief of innovation, do you see, how far ahead do you see in terms of the possibility of big insurance companies actually reaching out a B2C model using blockchain to recruit data?
What do you mean by recruit?
As in to get the data that you want to do your risk, because most of the time in the insurance industry, the data that you have, it's only there because it has been diagnosed. There has been data that you can't get it unless the person is already in the system.
Right.
Yeah, so I'm
you
just
mean
trying
data procurement?
Data procurement, you can use it too, because at the end of the day, in insurance industry, it's all about estimating your risk, managing your risk. So you want to actually be more proactive in capturing that data to be able to manage your risk.
Okay.
And yeah.
I see where you're going with this. So I'm relatively new to insurance, only 4 years. I come from the software industry, and I'll answer it very simply, which is the principle about pooling risk is at the core of the insurance industry, has been for hundreds of years. So the question that we look going forward is, how do we personalize insurance policies? Because as we understand, you can't have a mass market solution in any industry. You need to basically tailor it to that individual. So what we're looking at is looking for ways to look at third-party data that can inform us about that specific individual, so that when she's applying for a specific product, we can tailor that product to fit her specifically. So if we know about maybe a little bit about what her lifestyle is, her genetic predispositions, and she shares a piece of information with us, it helps us determine what might be her risk factors. But more important than that, we might actually be able to help her bend the risk curve. I mean, it's really the point. We're not here to basically just divvy up the risk and then sell it back. We are here, and MetLife has always been that way, to basically say, here are things I can actively do for you. We're no longer a what-if industry then. We're more of a so-how industry. What if I die? What if I lose my job? What if I get sick? Rather becomes, so how do I do gene editing? So how do I take care of my special needs son? So how, so how, so how? And that principle of using data, not just to price your risk, but to actually change your risk curve, aligns incentives, increases trust, and that's kind of the epic purpose as to why I'm doing this, right? Is because it will make a difference.
So pricing risk, I believe we have a question here. Michael, Michael is Senior Advisor, Prudential Regulation Authority, Bank of England. You want to
Yes.
question?
Most of my focus has really been around the negative externalities that affect sustainability, both in technology and obviously in the real economy. Do you see, or what is your view? Take an example. Do you see as the NOx fumes that come out of diesel engines? It's an issue in the UK. The NHS has gotten very good at quantifying the costs around that. But I'm sure if you go to other healthcare industry, other healthcare systems within, let's say, India, United States, could the blockchain and the information and the data help quantify the impact globally around things to be able to understand? And then from there, either the World Health Organization, governments can start making better decisions based on a safe collaboration around data, health data, related to a negative externality, which is obviously the NOx fumes, and make better decisions based off of them.
Can I give a
point? Yes,
Yeah, it's a
absolutely.
great example. I don't know about that specific case, but I'm going to give a parallel example, which is we all as human beings do things which are not good for our bodies, right? They are it's a negative externalities, the byproducts of choices that we make. If we had data that basically gave us the ability to maybe price every poor decision that we make about our health, then we could basically close the loop, let that customer know what are the consequences associated with actually having that, making that choice, and then that might actually change their behavior. Let me give a simple example, which is, I wear a wearable. Many other people have devices that are on them that might help measure some element of their self, right? The quantified self movement. Over the next 10 years, we believe that there's going to actually be more innovations around health and medical devices than there might even be around digital. And what that means is, with more and more ways to predict and to be able to measure every micro moment of impact we're having on our health, we might be able to, like the noxious fumes example, be able to not just price that, but actually turn that into a piece of information that we could use to get people to be healthier. That's the point, right? It's to change people's health outcomes, or to change, in that case, the sustainability element of the byproducts.
And then for a
Well, we did everything with the Monetary Authority of Singapore. Every step of the way, we were in the regulatory sandbox, which is why Ravi Menon, who's here, and Christine Lagarde got pretty excited about that.
We have another question over there, and then this gentleman over here.
Yes, hi. Great insights on the application of blockchain. I'm just curious, from a cultural perspective, right? Blockchain is so new. I'm just curious what you faced internally when you decided to make that decision. What did you face, and possibly how did you circumvent all that?
You want to take it? You do that.
Yeah.
I'll tell you our experience.
I mean, I'm sure there are other innovators out there, like, how did you even get started? Look, we believe in the idea of little bets, Peter Sim's great book, and the idea that if you have a small blast radius, you can experiment. So they have a sense of experimentality and curiosity, and the Lumen Lab is what we formed to do that. But I think the key here is culturally, we said, look, let's just not, let's work with the entire enterprise and organization to try to make this happen the first time, because it's just not going to work. Let's do it in the proverbial sandbox and just see if we put these things together, whether it will work. In fact, we were super confident with Cognizant that the tech would not be the limiting factor. It would be all the other elements. And it turns out that the EMR part was actually the trickiest part. But once we established that it would work, then I sort of took the wraps off of it and started telling everyone, including our CEO and other people in the industry, like, this is working. I remember I was in a conference in Vegas, and I think the Salesforce person said, wait, you mean this is actually live? Like, there are real women today in Singapore getting these payouts. And I don't think all of our management even knows about this, because it would be just too much for them to embark upon as any leader to go off into a new technology space. So you needed to do it in a sandbox. You needed to do it in a carefully controlled way. You needed to culturally get people to be sensitive about it, have all the fail-safes, work with the regulator, and then if it works, talk about it.
Lata, you should have had your kids in Singapore.
No, I got coverage. It was even better. But coming back, right, so I'll take the example of what we faced in Vitana and also other enterprise systems we've actually taken to serious production. So in terms of Vitana, I think 20% of the work was technology. I mean, just managing, communications to the different stakeholders. So the MAS needed to know it was compliant, how was privacy being handled. It was a whole set, from minutes of meeting to documentation to design document. It all has to be tailored to what they're looking at.
Customer acquisition. I was reading copy, editing copy for Sassy Mama magazine. Right? I mean, you're raising the awareness of the population to a risk that they never heard about. And that's what kind of makes it exciting, is that when you try something new that no one's ever done before, and you cover a risk pool that no one actually thinks exists, most of the work is not technology. Most of the work is basically just simply awareness.
Yeah, and tailoring the communication and being able to, and then in a different context, when you really try to take it to production, then it has to really go through compliance. It has to answer, a whole set of, that's another project. I know how to price for the next project, for example.
Right, before we move on, we've got one more gentleman here who,
yeah, I just wanted to complete. So it's the set of people who are coming in, it's about how they're incentivized. If you look at cyber and different, so they're incentivized to how many ways can I come and say no to this, right? Because, this is risky, why are we doing this? Whereas if the incentive is that if this goes well, you're all heroes. So we also saw how, the management the business in that case, wanted to really have the project, how they managed that internal change. It's a sizable organizational challenge, which I think is the thing with blockchain. I think blockchains has just made this all very hypey, but if you look at the mega trends of interconnectedness and your ability to being able to, have strategic alliances and partnership that go outside of, just your operational environment, which you can do efficiency, but unless you streamline with your partners and collaborate, I mean, that economy is already here. So blockchain is another tool. So, if you are not comfortable, because it's a significant organizational challenge that you have to work on to get right, and you need cross-functional people.
Exactly. Yeah. Collaboration and learning are key parts of our strategy. And for any company that's sort of forward-thinking, and therefore you have to see it as a hero if you get it to work.
Go for it.
So I'm Ken Timzit from Consensus. So thanks for the innovation. My daughter was born in Singapore, so thanks for that. And also, as a preamble to my question, I recognize that this is not all about technology. Having said that, I think we're also in this panel about technology. And so it looks to me, and don't take it the wrong way. It looks to me like mobile subscription, automated claim settlement were possible with technology that existed 5 years ago. However, I can see that the settlement between the insurer and the reinsurer, leading to potential securitization of risks, is a real innovation here and could be expanded to the entire local industry. And so I'm wondering, are you planning to onboard other local insurers so that you can even more dramatically lower the costs by having all the insurers and reinsurers on the same platform?
Yes, great question. So the answers are yes and yes. So we're already working with another local insurer to basically say, we can offer this as a claims as a service. Yes, it's low-hanging fruit to work between two parties in a peer-to-peer or B2B model for settlement, rather than just necessarily make it for the consumer. So I pretty much agree with all that you've said, but the bigger opportunity around sort of claim settlement, don't underestimate how important that is, right? I mean, a wow experience that improves, that reduces friction to zero is massive, because it's the moment that people don't want to do.
Thank you very much. Thank you. Lata, you talked about complexity. You talked about, of course, getting all stakeholders to buy in, know a lot more about blockchain. Is this actually one of the biggest hurdles for blockchain? Is it a lack of education?
It is, and it's not just technology. So you need cross-functional skills. You need industry experts who understand how does the process work today and how will that work in a decentralized architecture. So you're used to more centralized architectures that companies own and govern, and they have their arms around it, but you have to rethink a process in a decentralized architecture. So you need business people to understand a bit of the technology people to kind of empathize with, why is the process set a certain way. So I think that awareness, and then other groups, product and risk and controls, and because you're touching data, and if it's in a shared infrastructure, they want to put all of their controls around data around it. So they want to treat it as if it's theirs. And in a shared infrastructure, there is some give and take about, and it's fundamentally different. It's a different paradigm. So there is education, but that's where the opportunity is. And I think now in 2019, I think there's many more. We see a lot of training programs, and our own approach to how we have developed this practice in Cognizant has been putting together the technologists with the domain, people who understand the industry, and sort of, you have to have that cross-functional skill set. Otherwise, it's very difficult. You understand it, so what? So I think the same talent issue we see our clients also face. And some people, naysayers, will say, hey, why do I want to build on top of this stack? So few people really understand it, right? But that's not the majority. We're seeing people saying, hey, let's be open. Let's use this. Let's learn from this. Let's start with some things we control with a small set of partners that we are comfortable with. We are already doing stuff with them, and then kind of expand it and go. So I think it was much more, I was doing too many what is blockchain workshops 4 years ago. We are not doing those anymore. So it's very different.
And certainly also Sally, who unfortunately couldn't be here, was talking about how she's working with the UK on policy, and she finds she's going to different conferences, Manchester, Birmingham, London, but talking about the same things, educating them. Do you find a similar issue as well with you, Zia?
Yeah, I wouldn't say educating, but working with the regulators to get them to better understand the mindset shift that Lata was talking about between the centralized current way of thinking about data to a more decentralized approach. So it isn't just within the UK. We went and spoke with the Bank of England, but also Bank Negara in Malaysia, the Japan FSA, and of course MAS, and about 5 or 6 other countries. Regulators see that if we get this right, we might be a hub for an innovation ecosystem around DLT.
Well, I'm going to bring up the elephant in the room now, privacy. Clearly everyone's seen the headlines surrounding Facebook, many other data breaches, NHS being one of them. How has this affected trust in terms of sharing data, and how is this impacting blockchain?
Yeah, the only part that I would say is because of these issues, we were very careful as we were designing this particular experiment and any future ones to be clear about, does this piece of data from this individual person need to be on the chain, right? It has to be. If so, then what are ways in which we could basically use techniques to make sure that it is not going to be used in a malicious manner. And by reducing to the minimum number of things that you need to put on the chain, we basically think that we have not just a more secure system, but one that is actually more patient-friendly. You want to, Kiran?
Yeah, and I think that's one of the features of this. It gives the user more control over their data. And blockchain, just because it's blockchain, you're not going to share something that you wouldn't otherwise share. It's just a different way of sharing. And how you design the solution, is all depends on how the technology is used to design the solution in that context. So I think the fact that there's more security and giving a little more power to the users about who they can share with and who's using their data, the immutability and transparency feature, I would argue, is actually it'll deter people from bad actors from taking other people's data and doing things with it, which is happening today.
Yep.
So why it's actually got, I would say, features that make it more secure. Right. That said, how it is implemented, how our key management solutions, I mean, how do you protect the keys, right? So every user is not going to be savvy enough in eventual applications, right? So there are going to be other ways and be private keys. PKI is a big part of the how this is implemented. How are those managed? So that those innovations will develop. But to say that what we have today is great, and because of that people won't do, I think I don't agree with that.
And certainly there are outfits like Dovetail out there that are coming up with technologies that allow people to almost edit their data in healthcare. Do you see growth in this space? Is that where we might see growth, whereby we have companies that are also offering services to secure and manage data?
Yeah. I think there's going to be an explosion in the number of forms of healthcare data. In fact, we kind of banned the word care. So we sort of look at health and healthcare as completely different, separate moments. Healthcare might be when the medical systems sort of kick in. Prior to that moment where you actually have to see a physician, though, Angeline, there's all kinds of other industries that basically allow you to capture data about yourself and your health. And we've seen estimates that this could be as much as $1 trillion industry. 15 years ago, it didn't exist. You don't pay your mother to tell you to eat more vegetables. Now, your personal trainer, a number of different wearable businesses, there are so much more data that can be used.
Your watch can
of course, your wearable, your watch, tattoos that we've seen, contact lenses, all kinds of ways we're going to basically collect data about your health so that we can increase your health span, the moment by which you don't have to enter into the medical system. And that's really the point, right? That's the job to be done. How can we live longer, happier, thicker, fuller lives? And so the answer is yes. Explosion of health data will occur, and we need to keep it secure and be able to share it for the purposes of, hey, how can you, back to your question, bend my risk curve so I can live longer?
Is there a risk, though, Zia and Lata, that this becomes an opportunity to monetize this data, and effectively the healthcare providers become sellers of data, and that's where the profit is?
It's certainly not our business model. We're a life insurer, so we can't speak about that at all, really. I don't think it's going to happen. I think,
in the context of blockchain, if it is implemented in the right way, you give actually users, the owner of that data set, more power and control over how, who has access to it and how it moves around and so forth. So if anything, the monetization, hopefully, I would hope, opens up. Today, they are collecting honeypots of, and I don't know what healthcare companies do with that data. I don't want to comment on that. But hopefully, implemented with this new stack, you're actually able to give users more control. So you can revoke. You can, revoke access if a user doesn't authorize it. If you can't use it, then I think the danger of that happening when implemented on a stack like this is less than it is today.
It's like pharmacogenomics, right? If I were to share information about my profile, including my biome, what microbiome, it might actually help the pharma company design a specific variant of the drug that's going to be more effective for me. So whether it's not earn a return, but improve a health outcome by sharing so that you get return back. If we're sure about that kind of cycle, then consumers will want to share data because they get better outcome.
So it's a two-way street.
Always.
Right. One of the questions I put to both of you is, for example, the NHS is looking already to anonymize data and pass it on. So you might not sell on name, details, ethnic background, but you could, for example, have, everyone in this age group, how many of them have diabetes? Right. What I would say to you is, are we going to see more growth in this space? And I spoke to another healthcare provider, which I can't name. They're looking at, some sort of product where you don't say you've got diabetes or you don't say you've got an eyesight problem, but you choose out of 10 things, you don't say which one it is, but I have one of these conditions that will prevent me from driving. and then that then leads you to what sort of products you'll get. Are we going to see these variations in data that will then sort of spark growth in that industry?
I'm not quite sure. I look to certain examples, like the government of Estonia, where they have a shared database about their citizens. Done well, that database is a treasure trove of information about every Estonian that might actually help improve the health outcome of the population at large. I talked to somebody at Duke University about population health, and he said, look, you're just dabbling until you're able to reduce the cost of screening. Really, again, it's not about the medical systems as we know it today, but if you want to affect the population at large, if you can reduce the cost of screening and identifying a health condition, everyone will benefit. So I guess I agree.
Well, let's throw this to the audience now, because I see quite a few people nodding. Andres from Grupo Venegenia. Oh, unfortunately, he's gone out now. He had a question about basically trying to get more and more people signing up to the healthcare system in Venezuela, and how they were coming up with products that basically looked at diseases that weren't very, very severe. And his question was basically, are we going to see growth at these lower price points first, and then the momentum gathers so that you then see other diseases covered by
Excellent question. I really do think so. I think that the principle is of jugad in innovation, right? 94% of health and life insurance growth is going to come from Asia and Africa. So we will see smaller ticket, smaller amount type of products like the gestational diabetes one start to proliferate, right? We tend to look for things actually that are high incidence and low lethality, right? And we all know what these are. It happens to all of us frequently. It isn't that severe, but it would be good to basically manage that condition. And it also applies to cancer. We're so close to basically, cancer is no longer a death sentence. If it detects cancer stage 1, the survival rate is well into the 90s. Obviously, stage 4 is a lot lower. So that's a really important lever that you could use for melanoma, breast cancer, and other types of things. So I agree with him.
Right, let's just get a show of hands. How many in the audience are working on implementing or possibly the pilot stage of blockchain? Fantastic. We have 2 people. Any questions before we... There we go, that gentleman over there.
Hi, Christian Meister from Lexer. I just had one question around the implementation of blockchain in the insurance sector that I was never sure about how that would be dealt with. And this is the float, basically in the example you mentioned in the beginning, where you have the vending machine, where you get the Coke if you get the right coin inside. And in the insurance example, the Coke bottle would be the payout if something is triggered. So the payout would have to be in the smart contract, readily available to be fully trustless. But of course, then if you as an insurance company have to deposit all the float plus the potential payout in a smart contract, then your business wouldn't be viable anymore. So I was just wondering how you handle that payout problem on a blockchain-based insurance smart contract.
So great question, very astute observation. We're not sure how we're going to do it at scale, but the simple answer is, number one, because it's such a small amount and we can estimate the incidence rate, we can set that kind of money aside. Secondly, we worked with a reinsurer, Swiss Re, so that we could basically build our own contract to say how much are we going to allow them to reinsure back. But in the future, I don't think it would be that difficult a financial engineering problem to understand how we manage the float. It's been done for a long time. It's called parametric insurance. It happens for catastrophe insurance and other types of things. It just has never used blockchain before. So we think that the model for how you do a contract like that, which is if this then that, already exists in insurance. But great question.
Let's get another real life example from the audience. Anyone? Sure. Yep, thank you.
Hello everyone, Jonathan Parianti, former Vice President of JP Morgan. What I think is when we look at the market now, and the discussion is absolutely passionate, we are just like forgetting that there is like a current status on the market. and we have to find a way to bridge, and the path of inclusion and how we can get the mainstream adoption. So I think, getting, to healthcare and all the aspect that will bring humanity something positive they can really grasp. I think that's the key. And I think all of us in the room probably we are doing that. So I want to share one initiative that we are doing. We have created a social network for social good, which support the United Nations Sustainable Development Goals. So I want to have just your comments on that. We know that access to health is essential, and we know that there are parts of the world where we have the solution, but we don't channel that solution to millions of people that are suffering and that are unfortunately not benefiting from the luxury we have to have access to technology and innovations and being able to comment and exchange and all of that. But the reality is we have a potential to solve challenges for billions of people, and we have more challenges to come with the way we are living in this capitalism system, which is very consumer oriented, while at the same time we know we have reached kind of some limits, and we have to find and innovate in that regard. So what's your take on that? How can we resonate? How can we bring, everyone on board? How can we find a way from moving from speculation to real and sustainable development through that technology, which looks very promising?
Fully
Very
agree.
pertinent question.
Yeah, absolutely agree. So we think that there are probably three challenges, and so the first is, of course, awareness, right? There are billions of people who are not aware of the challenges that they have in their everyday lives. You need to make them aware of what risks exist. The second is access. So by having these simpler products available, what we're doing first with Vutana and others is looking first in the emerging markets to say, how do we provide access to other types of conditions to a variety of different people through existing channels? So first make them aware, like in Bangladesh, we're using comic strips of the Sherlock kind of character called Misir to let people better understand what are the risks associated with life and what are the benefits of this kind of thing called insurance. Second is access, and the third is we got to change the business models, as Lata was saying. You can't use the heavy infrastructure that you build for the Western European and North American markets for Asia, right? We need to innovate in Asia for Asia. I call it the Asiafication of demand.
Yeah.
And so we need to do that for us to be able to really, at scale, get to those next billion people who live 3 hours away from me in Singapore who are really not covered for anything.
And just to add, and it actually also partially answers the question from the Bank of England gentleman. It is true. Access to the digital world for much of the developing nations is through a smartphone. Whether they have access to other products or services or not, their access is through the digital, the phone that they carry, smartphones. So I think we are starting to see some, very positive activity. We have seen some initiatives around refugees and other things, and how, the UN, for example, can provide access to the refugees to the data they hold about them and provide liquidity of that data for the refugee to be able to go and buy services and get loans and other things where they don't have any identity. There are ways in which they are taking steps to try and use blockchain or blockchain-like technology to do that. So I think when that happens, when there's more government or this kind of push from organizations like the UN and others, I think you will start to see more adoption and more availability of that to those sections of the population. But it has to be driven by central organizations like that for it to be practically usable, because these folks are already in trouble. I mean, they are tech savvy to the extent they have access to a phone, but otherwise they don't really know how these technologies are implemented, or whether it's in their best interest, etc. So I think it's very encouraging that there are organizations like the UN who's actually looking to provide this service, and I think you'll see more of that.
Anyone else have questions surrounding?
Hi, Noeed Jabakil from Reuters. Zia, my question's to you. In the example that you gave, you said that the use of blockchain is going to cut down significantly on paperwork. Presumably that work at the moment, clerical work, is done by lower skilled workers. Are they going to lose their jobs? Do you care?
I don't think... So the work that's being done today could simply be something like order entry or reconciliation and adjudication. It's basically old school confrontation between two processes because there's friction. And that doesn't necessarily help anyone to have one party basically process information and then pass it along to another party that has to trust it but verify and then do something else to that information. It's duplicative and it's loss of value. So if we streamline it, everyone benefits because what happens is the data or the trigger allows us to just get on with it, right? And pay the claim to the customer. From the customer perspective, cost would be reduced, the premiums can go down, the amount of access goes up, and everybody can win. And guess what? Those people that we are currently employing go off and do more interesting things. I'll give a good example because I think you brought it up in the video there around fraud detection. If you do a really good job of using machine learning, not even using blockchain, to do fraud detection, what happens is that people actually get to spend time on claims, talking to people, as opposed to fiddling with Excel to figure out whether or not this dentist has actually taken that tooth out 3 times. So get back to the process of actually interacting with people is the byproduct of having more efficient tech.
Now, picking up on that question, well, have you got talent implications? So we talked about the changing workforce here in the WEF. Do we have enough talent to support blockchain in the healthcare and insurance industry?
I think it's keeping up with the way the demand is rising. I mean, as the more industries are starting to explore, there's definitely, like I said, more programs there, much more organized. You see about certifications across the different platforms, giving developers access to, get trained on these technologies. There's a lot of good work being done by many of the open source foundations. So I think it's keeping up with the way pace at which the technology is seeing adoption. I don't think that per se will be a challenge in the immediate term. I don't see that.
The business development is a skill that we used to call, I think a future job, Ben, might be a collaboration orchestrator, because how you work with other parties is sort of central to a decentralized system like blockchain. So if you're looking for a job of the future is, how do you as a large company, MetLife, figure out how to work with 5 or 6 different parties, which isn't a job that existed a year ago.
Right, I think we have time for one more question from the floor. Anyone? Right, let's move on to scalability and timelines. Where are we at? I mean, we've talked about blockchain for the last 5, 6 years, more even. How long before we get serious momentum and we see this impacting everyone's lives when we go and see the GP, for example, or speak to an insurer?
So a management consultancy called Oliver Wyman put out a chart at the last year's InsurTech event. And like a good consultant, they didn't put any numbers on it. Basically, all they said was the insurance industry is going to double over some period of time. They didn't say how long. But what they did say was that the incumbent models are going to decrease by about 1/3, and the remainder is going to come from new models. Mm-hmm. So what is that time period, right? And the quote that everyone quotes back is people overestimate the amount of change that's going to happen in 1 year and underestimate the amount of change that's going to happen over 10. And so clearly in a 5 to 7, maybe a 10-year horizon, we'll have a data explosion around health. We'll have figured out some of the issues around trust. We will have this sort of explosion of new types of business models. Mm-hmm. And what you're going to see is the existing products will still continue, but we'll have all kinds of new products that aren't replacing the old ones, but are additive. And if you just want to look at the future's already here. It's in China. It's in Singapore, where you start to see people topping up their existing healthcare with little slices of insurance that they need every day.
And yeah, new network effects, new incentives, and creating new products. I mean, right now we're still talking, how do you do this to solve this efficiency? But when you have the infrastructure, the new kinds of businesses that can develop on top of that infrastructure, I don't think anybody has even imagined it completely. And I think that comes down to the point of enterprises, whether you just wait for, is innovation only for digital startups and natives, or can existing enterprises? And I think that I do see a lot of them seeing the opportunity and or the threat and starting to adopt it, and and I think they see their future more as maybe as software businesses.
And just very quickly, in one sentence, your key message from Davos 2019, what would it be on blockchain?
I think less hype, more real work, and that's what we've been doing, and I hope more of the industry does that.
Zia?
Inclusion. We can basically involve the next 2 billion people through things like blockchain.
Right. Thank you very much, everyone. A big thank you to our panelists. A big thank you to all our guests as well, who've been very, very good. Thank you for coming to Reuters Point in Davos. And of course, those of you watching on our live stream, good night.